Mutual funds have become a popular investment choice for many, but with so many options out there, it can be tough to pick the right one, especially if you are a new investor. So, we thought, why not decode one such mutual fund that anyone can begin with? Since index funds are gaining popularity, we decided to explore one of them. Among these, Zerodha's Nifty LargeMidcap 250 Index Fund caught our attention. Most people know Zerodha and its founder for their stock broking business, but recently they have also started an asset management company. At first, the name Nifty LargeMidcap 250 Index Fund seemed super technical, but when I looked into it, it turned out to be quite fascinating. Let me share what I found. The name Nifty LargeMidcap 250 gives a good hint about what this fund is all about. It combines the top 100 large cap companies and the next 150 mid cap companies listed on the NSE. Large cap companies are known for its stability, while mid caps often have higher growth potential. So, this fund essentially blends these two categories. This fund currently has investments totaling around 652 crore. That's the total amount pooled in by investors. A fund of this size can generally manage money inflows and outflows more smoothly, which can help in maintaining consistent performance. Something I found quite useful to know is the expense ratio, which is basically the fee charged for managing the fund. For this one, it's 0.27%. A lower expense ratio is generally preferred because it leaves more of the invested money working in the market. Another important aspect is the tracking error, which shows how closely the fund mirrors the index it's supposed to follow. For this fund, the tracking error is 0.03%, which is low. This indicates the fund is closely aligned with the performance of its benchmark, the Nifty LargeMidcap 250 Index. The fund includes stocks from well-known companies like HDFC Bank, ICICI Bank, Reliance Industries, and Infosys. These companies operate in various sectors like banking, technology, and energy. So, the portfolio is well diversified. Diversification means that the fund spreads its investment across different industries. If one sector faces challenge, the other might balance things out. For instance, if the tech sector underperforms, stable sectors like banking or consumer goods could help cushion the impact. What stood out to me is the blend of large cap and mid cap companies. Large cap stocks usually have consistent earnings and has less volatility, making them relatively stable. On the other hand, mid cap stocks often have more room to grow, which adds an element of the growth. This mix makes the fund versatile, catering to a variety of investment preferences. Another thing that I noticed is how the fund doesn't focus too heavily on one sector. By distributing investments across industries, it aims to reduce the risk of being overexposed to one specific area of the market. From what I have read, the structure of this fund seems designed to provide balance, a mix of safety from large caps and the opportunity of higher returns from mid caps. But, of course, every investment carries some risk, and it's important to understand that this is no exception. If you're curious about index funds or want to learn about diversified investment options, the Nifty LargeMidcap 250 Index Fund is definitely an interesting example to explore. It covers a wide range of companies, has a low expense ratio, and seems to track its benchmark closely. That's everything I found about it. Always take the time to do your own research before investing though. It's great to understand how things work before putting your money into anything.